The analyst Adam Jonas is bullish on Tesla's supercomputer Dojo, which is powered by artificial intelligence, and believes it puts the EV maker at an asymmetric advantage in a $10 trillion total addressable market. Jonas also raising his price target on the stock to $400 from $250 per share.
Of course, this has a great effect on the company's stock. In fact, Tesla shares rose more than 10% after a Morgan Stanley upgrade, an optimistic note that envisioned Tesla selling AI technology to other automakers and saving money by using its own GPUs as much as possible rather than paying for chip supply from NVIDIA. Morgan Stanley analyst argued that Tesla should be viewed as a tech company as much as an electric car maker. The firm set its new price target at $400 for shares of Tesla, up from a previous price target of $250 as of Monday, emphasizing the potential of Tesla's Dojo supercomputer project and custom silicon. Morgan Stanley believes Dojo could theoretically add up to $500 billion to the company's value long term.
Whether it's an auto company or a tech company, he believes it's both and sees the biggest value driver being from software and services revenue for Tesla.
And this is a big note coming from Adam Jonas on this particular thesis here. He puts the total addressable market of whatever this is at $10 trillion. I guess the market for the supercomputer for artificial intelligence in general, and talks about adding up to $500 billion to that Tesla enterprise value. That's how he arrives then at the price target increase, which is sizable here.
Simply put, Morgan Stanley's renewed bullishness towards the electric vehicle company is driven by the upside potential in its Dojo supercomputer, which the bank says can add another $500 billion to Tesla's market value. Analysts led by Adam Jonas called Tesla a top pick and raised their price target to $400 from $250, representing a potential upside of nearly 50% from current levels.
And this supercomputer that I guess Musk has talked about in the past, but this is the first time that Jonas and his team have really dug into it and tried to figure out what it could mean for the company. He likens it to what AWS did for Amazon, as perhaps what Dojo can do for Tesla.
The same forces that have driven AWS to reach 70% of Amazon's total EBIT can work at Tesla, in our view, opening up new addressable markets that extend well beyond selling vehicles at a fixed price. The catalyst? Dojo, Tesla's customer supercomputing effort in the works for the past 5 years, Adam Jonas said. It is worth noting that in June, Tesla shares moved lower after Morgan Stanley lowered its rating ahead of its pivotal second quarter delivery and earnings reports, noting a significant degree of investor skepticism around the world's most valuable electric car maker. At the time, Adam Jonas cut his rating on Tesla to equal weight from overweight, but insisted he was not trying to call an end to the stock's impressive 2023 rally as he added $50 to his price target, which now sits at $250 per share. Still, with Tesla shares trading at more than 100 times higher than Jonas's full-year earnings forecast, the upside would need to come from areas other than its mainstream EV dominance. Tesla remains a must-own company in any EV portfolio. We see continued evidence that Tesla is emerging as an industrial standard-bearer for one of the greatest industrial changes we've witnessed in over a century, the electric transport and renewable energy economy. Jonas wrote then, "This goes well beyond supercharging deals with the likes of GM and Ford, and look for other potential areas of collaboration, battery supply, operating systems, FSD, etc. to follow." Jonas then added, "We see Tesla as an AI beneficiary and an auto company. High expectations on the former have brought the stock to a fair valuation. This is the reason why some were surprised about the recent upgrade." However, according to Jonas, Dojo should help improve Tesla's full self-driving technology, which requires immense computing power that is well suited for a supercomputer like Dojo. And a better full self-driving product should lead to more higher-margin revenues for Tesla, as customers decide to include the add-on FSD software capabilities to their car purchase. The more we realized the potential for underappreciated value in the stock, Jonas said. We believe Dojo can represent the next step change in market perception of Tesla. He estimated that Dojo could drive $6.5 billion in cost savings for Tesla over the next couple of years, as the company increases its computing power with the in-house developed supercomputer. And importantly, Dojo, which consists of thousands of GPU chips from NVIDIA, can speed up the development of autonomous driving capabilities. According to Tesla, Dojo can shorten the time needed for training workloads to less than a week from more than 1 month. The potential efficiency, speed, and cost benefits compared to current GPUs could allow Tesla to materially reduce their autonomy timeline, Jonas said. Tesla's Dojo supercomputer could also help the company develop its humanoid robot and have broader implications for the various science projects being worked on by Musk. And that's what makes Tesla's ownership of the supercomputer so special for investors.
Well, Musk has said the same thing similarly before, saying that it makes sense to offer Dojo as a service. So perhaps kind of similar to what we've seen with AWS. There's also going to be a lot of data that's being able to be leveraged and going to be leveraged from Dojo. It's basically AI machine learning, and for video training, using the video data coming from its fleet of vehicles is how the company has described it in the past. And that amount of data, especially across the fleet of Tesla vehicles, that could be kind of integrated in anything from insurance processes all the way through just making the driving experience that much more safe.
The point we'd make to investors is that Tesla is just one part of a larger area of scientific and commercial interest on which Elon Musk is allocating time, financial resources, and talent. We see Tesla as one of the more complex and unifying businesses which can serve as an experimental lab to iterate on advanced technologies with a high degree of mission difficulty, Jonas said. It is worth noting that in July, Tesla CEO Elon Musk said that the company planned to spend more than $1 billion on Dojo by the end of 2024. Tesla is developing Dojo to help with AI machine learning and computer vision training purposes for its cars and nascent robotics efforts. Among other things, Tesla uses video clips and data from its customers' vehicles to improve existing software and develop new features. Highly bullish Tesla analyst Adam Jonas wrote in a recent note, "Although Dojo is still early in its development, we believe that its applications long-term can extend beyond the auto industry. Dojo is designed to process visual data which can lay the foundation for vision-based AI models such as robotics, healthcare, and security. In our view, once Tesla makes headway on autonomy and software, third-party Dojo services can offer investors the next leg of Tesla's growth story." Morgan Stanley also expects Tesla to be able to generate $2,160 in recurring revenue every month from its vehicle owners in 2030 from services enabled by Dojo and subscription software in cars like self-driving systems, which Tesla does not offer today, vehicle charging services, maintenance, software upgrades, content, and others to be developed in the future. Elon Musk promised that a Tesla vehicle would complete a self-driving cross-country demo without any human intervention by the end of 2017. Tesla vehicles still only offer advanced driver assistance systems, which require a human behind the wheel ready to steer or brake at any second. Elon Musk also told investors earlier this year that Tesla would focus on growing sales volumes and extending its lead in key markets over improving profitability following a mixed first-quarter earnings report that included the weakest profit margins in more than 2 years. From a production standpoint, if things go well, we've got a shot at 2 million vehicles this year, Musk told investors in early April, but that's an upside case, and we feel comfortable with 1.8 million, and we'll have to see how this year unfolds. Meanwhile, Deutsche Bank, another firm that is bullish on Tesla, notes risks to the EV maker in Q3 from planned summer production shutdowns, which will push both production and delivery down QOQ. Discounts on inventories, and limited positive cost offsets in the quarter, and set a price target at $300 in a note released to the public just a few days ago. Notably, Tesla slashed the prices of its electric vehicles earlier this quarter after executives cautioned investors on the company's last earnings call that production and delivery volumes would likely decline this period versus the second quarter due to planned factory closures. Tesla also cut the price to purchase its premium driver assistance system, marketed in the U.S. under the Full Self-Driving or FSD brand name, from $15,000 to $12,000. Those price cuts, among other things, had weighed on Tesla's share price in recent weeks, although after the Morgan Stanley note on Monday, Tesla shares spiked above $272 midday. Nevertheless, if Tesla reaches Morgan Stanley's $400 price target, it would have a valuation of nearly $1.3 trillion. The stock hit a record high of $414.50 in November 2021. Make sure to subscribe for more.